the big question, isn't it? How do you stop the yen appreciating? And what is the most effective way, do you think?
There's nothing that can really be done, I don't think, by the Bank of Japan. Although if you think back to their last big intervention, this is in 2004, they really did pull out the big guns. This is when they accumulated about a lot of their $1 trillion in reserves.
I mean, it didn't work, did it?
Exactly. It didn't work then. So at the moment, I think it's quite true, unless there's real increase in appetite for risk. So moving away from this low-risk, risk-aversion trade, it's probably the only thing that's going to affect the yen's strength. And this is why I'm not surprised that the initial market reaction was that the yen actually went up against the dollar, because it was very much probably not. I think the promise here is much bigger than what's likely to happen.
Should the BOJ be buying more bonds? I mean, they kept their monthly quota unchanged. Does that need to be changed? Keep buying more bonds or not?
Well, the idea is that if they buy more bonds, they would inject more cash into the economy. If you inject more cash in the economy, you can address deflation. But inherently, I don't think that works either. And in fact, buying up JGBs seems to reflect a weakness in the Japanese economy rather than increasing inflation. But this is the problem with the deflationary trap. There's very few measures which can be done to get out of this. The only thing that can get out of it is if households and companies expect future price rises and begin to spend. But changing that attitude hasn't worked for 20 years. And, tinkering by the Bank of Japan isn't going to change that.
Are other countries facing the Japanese deflationary story? I mean, that's the big debate out there. What do you think, Linda?
I think there is a real danger for the United States. It's less of a danger for Europe, even though this was the big thing at Jackson Hole. Trichet is very worried about Europe going into a 1990s-style Japanese deflationary trap because of all this debt deleveraging, which can cause a deflationary price spiral. As debt gets shed, prices fall, output falls, and then it's reinforcing. However, in the U.S., where this is more likely to be the case because of the scale of the financial crisis and the scale of indebtedness, Bernanke wasn't worried about deflation, and he's really viewing the U.S. more as a slow growth story. But I think it's a real danger for both areas, not all of Europe, just in the highly indebted countries like Spain, like Ireland, like UK, like Greece. It's less of an issue for the stronger Eurozone countries.
Is he right not to be worried about deflation? I'm sure he's thinking about it in private, but I suppose if he cites concern about deflation, we might all get spooked. I mean, is that the
I think Bernanke has to be really, really careful. And I mean, basically, Bernanke said we'll have to wait and see. So at the moment, the price momentum is fading in the U.S., and there is a lot of debt deleveraging going on. I think what he said was they will use unconventional monetary policy to try and change it if that does come to pass. But I think there is a real danger there. And again, the only way to get out of it is to change people's expectations of prices.
Yeah.
So therefore, growth has to pick up, unemployment has to fall, and we also heard from Jackson Hole that the U.S. may be in for 7 years of slow growth and high unemployment.